FBTC ETF review. Is it worth investing in? How does it compare? Despite its recent emergence, it's already making waves, showing potential to compete with the giants of the ETF market. How, you ask? The key lies in the correlation between the spot value of Bitcoin and the track records of other ETFs. As we observe these, we find that FBTC is on par with its well-established counterparts. It's a testament to the robustness of FBTC and the effectiveness of Fidelity's management. So even though FBTC is a newcomer, it's not a lightweight by any means. Just remember, at the end, we'll have the final verdict, so stay tuned, you'll like what you hear. And remember to subscribe for more videos like this. Now one might ask, how does FBTC fare when compared with other Bitcoin ETFs, such as GBTC or even the spot value of Bitcoin? Well, let me show you. Over the past 3 years, when you measure the performance of each of the funds compared to each other, they've been nearly in lockstep with one another. So using this information, we can take the fund GBTC, which has been around for a while, and use that as a proxy for performance. This means that even though FBTC has only been around for 3 years, we can still do a 10-year backtest ready to see what we found. In this scenario, if you invested in GBTC started with an initial balance of $10,000, it would have grown to a whopping $912,456. That's an impressive compound annual growth rate of 72.82%. Although it's worth noting that this came with a high standard deviation of 131.01%, indicating a significant degree of volatility. GBTC's best year saw a staggering 1,557.21% return, but the worst year plunged to a negative 82.10% return. That's the nature of the beast with such investments. The highs are high, but the lows can be pretty low. The maximum drawdown for GBTC was a considerable negative 83.43%. Now let's shift our focus to FBTC. It performs similarly to GBTC, but here's the kicker. It has a much lower expense ratio of 0.25%. Expense ratios, for those unfamiliar, are the annual fees that all funds or ETFs charge their shareholders. It's essentially the cost of doing business. So what does this lower expense ratio mean for FBTC? It's simple. A lower expense ratio can translate to better overall performance compared to GBTC. Why? Because a lower expense ratio means less of your invested money is used to cover operating expenses, hence more of it is working for you. As we can see, FBTC's lower expense ratio gives it a potential edge over GBTC. So when you're considering your next move in the Bitcoin ETF market, FBTC certainly deserves a spot on your radar. So what exactly makes FBTC such an intriguing Bitcoin ETF? Imagine a race where all competitors are running with the same speed, but one of them is carrying a lighter backpack. That's FBTC for you in the world of Bitcoin ETFs. It's designed to mirror the performance of other funds, but with one key difference: it does so at a significantly lower cost. To understand the potential of FBTC, let's first revisit its performance. It's been performing on par with the Bitcoin market and other Bitcoin ETFs. An initial balance of $10,000 in Bitcoin could have grown to over $1.5 million. That's a compound annual growth rate of over 85%. However, Bitcoin's volatility can be as high as 80%, with the best year yielding over 1,200% returns, and the worst year showing a nearly 72% drop. Now let's take GBTC as a benchmark. It's shown a similar pattern, turning $10,000 into over $900,000 with a compound annual growth rate of over 72%. However, its volatility is higher than Bitcoin, and its worst year showed a more significant drop of over 82%. So how does FBTC fit into this picture? Well, it performs similarly to these funds, but here's the kicker. It has an expense ratio of just 0.25%. That's significantly lower than GBTC's 1.5% expense ratio. This means that all things being equal, FBTC could potentially offer similar returns, but at a lower cost. This lower cost can have a significant impact over time. It means more of your investment stays in your pocket rather than being eaten up by fees. And in the world of investing, every little bit counts. With its potential to offer similar returns at a lower cost, FBTC is certainly a Bitcoin ETF to watch. So, what's the final verdict on Bitcoin ETFs? Well, the evidence speaks for itself. FBTC, a relatively new entrant in the ETF market, is showing promising signs. It's matching stride with the spot valuation of Bitcoin, mirroring the performance of stalwarts in the field. Using Grayscale Bitcoin Trust as a benchmark, we see that FBTC is not only holding its own, but also has the potential for higher returns, thanks to its lower expense ratio of a mere 0.25%. However, let's not forget the allure of buying Bitcoin outright. If you were planning on buying and holding, there might be less fees associated with that if you bought Bitcoin outright. Just because if you buy an ETF, they're charging you management fees for essentially holding Bitcoin on your behalf. The difference comes if you're a trader, buying and selling based on a strategy versus holding for long-term appreciation, which is what this video went over. With its impressive compound annual growth rate and strong performance metrics, it's hard to ignore the potential benefits. Yet, the volatility of the market and associated risks may not suit everyone. In the end, the choice between Bitcoin and Bitcoin ETFs like FBTC will depend on your investment goals and risk tolerance. But one thing is clear, FBTC is a Bitcoin ETF that merits consideration.